day. This is Richard Wexler, and this is Caring in America, the podcast for caregivers and care recipients. So, most of you know that have been listening to me for a while why I'm doing this. 20 years ago, I'm minding my own business in the software industry, married later, two small kids, four parents between my wife and myself. They're doing great. No. We find out in the summer of '05, our phone starts ringing. They're not doing great. We wind up taking care of all four of them. That care adventure lasts for 14 years until the last parent passes at 96 in 2019. So go back to '05, realized I could barely spell the word care, left what I was doing in software, figured I had to figure this out somehow, started reading everything I could get my hands on. Probably 6 months later, a gentleman shows up at my office and says, "All right, son, you got to get out there and start educating people about what it means to age and need care." And I kind of said, "What?" And I did. And so educated all over Northern California where I was, and then eventually all over the United States. Started this podcast 2 years, a little over 2 years ago. Through the podcast, met my future business partner, Peter Ross, and we co-founded our national foundation, A Plan to Age, earlier this year. So we have a special guest with us today. I'm about to introduce her via her bio. Laura Phillips is a licensed reverse mortgage specialist with over 25 years of experience in real estate lending, dedicated to guiding clients through the HECM and reverse loan process to ensure they make informed financial decisions for their future. Serving all of Colorado, she specializes in FHA HECM and the proprietary portfolio jumbo reverse loans, helping her clients enhance cash flow and preserve their retirement assets. Laura believes that a home is more than just a house. It's a significant financial commitment, and she is committed to helping families enjoy their best years in their homes. Are you there, ma'am?
I am. Thank you for having me on board, Richard.
Welcome, and tell our audience, where are you physically sitting today?
I am physically sitting in Longmont, Colorado.
Which is located exactly where?
It's about, I don't know, mileage wise. Let's just do driving because that's what I always do. It's about 30 minutes north of Denver, between Denver and Fort Collins on I-25. I'm in Boulder County, so I'm about 20 minutes from Boulder also, and about an hour from the Rocky Mountains.
They're a beautiful part of the country.
They are.
You are
Yep.
spoiled.
Looking forward to the leaves changing.
No, I understand. So I want to talk about this subject. I'm going to ask you a general question. Do most people know what a reverse mortgage is?
I think most people don't know what it is. They do know that everybody tells them don't do it.
Okay.
And there were a lot of myths and rumors about how it was a bad product. So they don't ask any further than that. They're frightened by what they've heard from friends, family members, church, things of that sort.
And I've said this before. I actually got into a soft argument, if that's the terminology, with an older gentleman 15 plus years ago at an event where I was doing a bunch of education. And I know enough about a reverse mortgage to be dangerous, but he got up when I was talking about it and basically was saying to me what you're saying to me, that most people think it's a bad product. The bank's going to take your house. Don't do it for this reason. Don't do it for that reason. And again, with my limited knowledge, was trying to help him understand that may have been what it was in the past, but I believe that it's changed. From that perspective, and I'm not sure I really ever asked this question, from a financial strategy perspective for your retirement, is talking about getting a reverse mortgage a good part of that strategy?
I personally think it is. Now, I'm not a financial advisor. I do have quite a few financial advisors that do think it is. My thought is at some point in your 30 plus years of retirement, that it's a good option to consider and look at. It doesn't fit everybody's needs, but if you don't ask the questions, you'll never know if it's going to work for you or not.
Sure. And I think there's a key you just hit on. And I've been out now after I learned as much as I could, and I've certainly learned a lot more over the last 20 years out educating people and talking about the complexities of aging and care. And obviously, reverse mortgage be one of the ways you can pay for care. And the number you used in there that I'm not sure people think about. You want to retire at 65, maybe you retire at 70, and we are living longer. I remember years ago, I'm old enough, it's 72 now, to remember parents would move in with the adult kids, maybe last till their mid 70s and pass, where nowadays you can be mid 90s or well over 100. So you are looking at something that may be for long term. Do you have any thoughts on that?
Absolutely, I do. In fact, my father lived to be 91. And my mother 86. So we are, I mean, they lived longer. I think we are the boomers. We are a big generation. There's a lot of us. And we are living longer. I guess the best thing I can say is I've had two 91-year-old people do reverse mortgages to help them continue to have care in their home. So look, if you just look at the list statistics, I would think most 91-year-olds might not be with us, but that's no longer the case. We have centurions, people who live to be 100. That used to be a rarity. That's not any longer.
I talked about quite a bit that 10 years ago when I was in California, I worked with a client that he didn't start doing poorly till he was 115.
Isn't that amazing?
And he didn't pass till 117. So when I've looked at people, okay, what are you going to do? Hopefully, you live this long retirement. Nothing ever happens to you, which is unlikely, where you need care. But I would think this is also going. So maybe a lot of people don't these days, but maybe you have a pension and hopefully you have Social Security. But I would think, and I want your comments on this, I would think it's a way to also boost your retirement income.
Absolutely. Absolutely. I don't know that any of us have really prepared for what it's going to cost for us to age to, let's say, 90 years old. I'm the same age group you are, and that's still easily 20 years out. Medicine gets more expensive, health goes down. I have to modify the house to be able to stay in it. Those are all expenses that when you retired and you're looking at your nest egg and going, "Wow, it's several $1,000,000, I should be fine," right? Um, it goes pretty quickly, and, um, I think it's a hard place to be.
One of the things we do, folks, and just to let folks know, on October 14th at 1 p.m. in the afternoon on Zoom, having our next conversation on Fiji. And we're going to be talking about over 10 different ways to pay for care. Obviously, reverse mortgage is one of those ways. And it's something that just about anyone in this country needs to understand because, like I said, the plan to age is exactly what it says. We are really trying to educate people and help them understand that, kind of like you said a few minutes ago, people need to plan. People need to understand. It would be wonderful if you and I and everybody else, as we got older, we just did great. But I mean, stuff happens. And so, and then you also mentioned, I mean, as we age, our income probably does get fixed to some degree. We still have expenses, and I may be wrong, you can help me. But I believe with a reverse mortgage, and you can tell folks how this works, there are no mortgage payments if I'm correct, ma'am. Am I correct?
You are absolutely correct. It is the only known I know out there in the world that does not require you to make a mortgage payment. Yeah, so you can go get a reverse mortgage and get money as a lump sum, get a 10-year payment, which is a lot like an annuity payment, and never make a mortgage payment if you don't want to. Now, what happens is the balance does grow. Banks like to make money, so that that if you don't make the payment, that's where they're going to get it. But again, most of us are on fixed incomes at some point, and with inflation and just general costs of living going up, it's hard to make that mortgage payment also. So it's a great way to be able to take a deep breath in your senior years, which neither you or Richard are, we're not there yet. No, we're in your senior years. No. That you could take a deep breath and go, I can breathe. I don't feel so stressed out about the finances.
No, that's really interesting because, yeah, all of our lives, our parents and then us, you get a loan, you got to pay for it. And I understand that it has to be settled at some point when the house is sold and so on and so forth. I get that. But again, having access to money, not having to pay for it is, for, I would think, for a lot of people, pretty advantageous. Also, and correct me if I'm wrong, I would think, maybe I'm wrong, you can access the money, assuming you qualify, and depending upon how much, fairly quickly, because so many people, which we talk about within a planned age, don't plan. Something happens, they break a hip, whatever, they wind up in skilled nursing. Now they're going back home. They need to bring care in. It's expensive. They don't have a lot of cash. They need to get some of that money from the home. How long does it normally take from start to finish to put money in someone's pocket?
Well, I think start to finish to do the loan, because that's where we're gonna get the money from. I give a conservative estimate of 6 weeks.
Okay.
Now, it can go much faster than that, depending on how motivated, the person might be. It does require a counseling class. That's an hour, done online or well, not online, but usually do it through a telephone. There are very few that are in person.
Okay.
Once that counseling class is done, we can run with the, paperwork and get the loan through, get an appraisal done, and then we go to the closing table. Now, there's a federal law that requires that all refinances on primary homes require a 3-day cooling off period, just to make sure that you don't have buyer's remorse, so to speak, and that you're ready to, you want to move forward. At the end of that third day, the money can be wired into your bank account, or you set up a line of credit if that's what you want to have, and you contact the institution that's servicing your loan, and they will wire money into your account within, I'm going to guess, 24, maybe 48 hours at the most. I don't work on the servicing side, but it's very quick. It does come to you very quickly.
So let me put an example out there. Is so mom falls, she breaks her hip, she winds up in the ER and winds up having, let's say she's late 70s, winds up having to have surgery. She's told you will probably need to go to a skilled nursing for a period of time to learn to move from your wheelchair where you show up into a walker to be able to come home. Average time for someone like that is probably going to be about a month in skilled nursing. So if they understood right after mom broke the hip, start applying for the reverse mortgage, we're talking probably at least a month out before she gets back home because Johnny or Susie, the kids have shown up. They realize paying for care in the home where mom wants to be could be challenging. This could be a really good vehicle. And per the time that you're talking about, that may be about the time that mom shows up in the home. Do you have thoughts on that?
I do. First of all, most of the lenders I work with do not wish to have you in the nursing home. They want you to occupy and live in the home at the time of the loan process. So there's a little catch there in your scenario. Let's make that better for them. Let's say that mom was thinking about the reverse mortgage, but she wasn't too sure. So she took the class. The class is good for 6 months. So at that point, when that happens, she knows she's going to be in nursing care. We can have everything ready to go so that the day she comes out, the class is done, the paperwork has been gathered, the loan application has been done, and all we're waiting to do. In fact, we can even get it's not a pre-approval, we can get a conditional approval from the underwriter and then let them know that we're waiting for her to return back to the house and then get a appraisal. So we've shortened that time, but again, she does need to be in the home at the time of the application.
Because the more I think about it, we're trying on our website, we have the planning piece, we also have the crisis piece because so many people wait until crisis. Folks, if that's you and what Laura is talking about, this is, and assuming there's equity in the home, and we'll the age limit, and we'll talk about that. And I want to ask you about this class as well. And assuming you qualify, great vehicle to help mom, help dad be able to afford that care in the home. And we'll also talk about other ways they can use the money as well. So that question, is there an age limit that someone has to be able to qualify?
For the standard HECM loan, which is a government product, it is supervised by HUD, it would be 62 years old. And that goes to $1.2 million. And a loan limit covers a good amount of houses in the United States. However, a lot of people's houses have appreciated very nicely above 1.2 million. And so we do have a jumbo product out there. It's a proprietary loan that can start at age 55. And that particular loan amount will go as high as 4 million. So I think we can accommodate most people.
Wow. And an assumption that's rolling around in my head as well, correct me if I'm wrong, can you possibly get more money when you're older? Let's say you're doing this in your 70s compared to doing it at 62.
Absolutely. It's the only thing besides maybe getting a discount at the movie theater where it's okay to be old and getting older each year. We base the amount, the principal limit, which is how much you can actually access of your equity, on three things: the age, your age, the value of the home, less any loans against it, and then the interest rate. So each year you get older, excuse me, 6 months of your birthday, then we will count you as the next year older, and that's a benefit. It's a huge benefit. You bet. So the older you are, the more equity you can access.
Interesting. Very interesting. So I want to ask about this class. This class that you take, you said normally it's online. What is the class? What is it for? What is the individual going to learn?
Well, the class is actually to confirm that the person, the senior who's taking this loan out, understands exactly what a reverse mortgage is. So, if we've been good loan officers and we've educated well with our clients, then they're going to go in and they're going to understand the questions. And it's just an hour long, more like a consultation than an actual class, to go over the numbers. We send them some proposed numbers. They go over those numbers and say, you do understand that the line of credit is a negative amortization loan. That has a very scary term to it, but it just means that the bank will be tacking on the interest that's not being paid to the loan balance each month. So, you're right. You don't have to make a payment, but of course, that's how the bank will continue to make their money. Now, you could make an interest only payment if you wanted to. So that's one of the things they want to make sure that you understand. The other two things is that how you could lose the home. And so that would be in saying that you don't live in it any longer. So if you have not occupied the home and you're not planning on it, you've gone to a skilled nursing home and you're going to stay there, then that would trigger a due on sale clause, which would bring the loan out of being in the loan and into the active of let's get it paid off. Or the last one, and probably the most important, is you as a senior going forward are going to be responsible for your taxes and insurance in 99% of the cases. And that means if you don't pay your taxes, that there's a tax lien that goes ahead of a mortgage And that is how you can lose your home. So they're going to want to make sure when they're talking to the seniors, they've been well educated to understand how you can lose a home.
That's awesome. Is that different, let's say, in the last 10 or 15 years than was there a class offered years ago? Was this gentleman that I was having that soft argument with, was that available so many years ago to be educated like this?
The education may have, I don't actually know the data when the education started, so I should look that up. But the loan's been out since the Reagan era, but there were a lot of things they didn't think about. And one of them, when they first created the loan, was to make sure that the client, the senior, could actually afford the taxes each year. So that is a good way that somebody could have lost the home or a friend of theirs lost the home back in the day. I mean, I often say to people, it's not your grandmother's reverse mortgage because the laws have changed. They've made it more secure, in many ways, I say a kindler and gentler loan.
I would guess that maybe happened to a friend of his where the gentleman or a lady had some financial problems that caused a problem with the loan. However, it got translated to him. It turned into the bank was taking the home.
Right.
But no, this has been, as we get ready to wrap up, this has been a great conversation. I do have another question. I want to make sure people understand this. We've been talking about care. We've been using the money for care. Can you use the money for almost anything?
You can use the money for anything. It's your money. And yeah, I mean, when you call and say, I want $5,000, I think every senior goes through a story to that servicing department saying what they want the money for. They don't care. It's your money. It's your funds. You can spend it how you want.
So you want to pay for grandkids to go to college. You want to take a vacation to wherever. You want to add on to the house. I'm not sure why you're doing that in your senior years, but maybe you're doing it. I mean, you want to buy a new car. You want to do a lot of different things. No one's going to say, big word, no one, but no one's going to say to you, sorry, Larry, sorry, Charlie, you can't do that.
That's absolutely correct. In my counseling, when I visit with the clients that I work with, I always make sure to remind them you can do all of these things, but please remember that you're still going to have to pay your taxes and insurance. Most of the seniors I know use that as a reserve to be able to make that payment because it's a lump payment. Um, we're not always well disciplined people. And so to put 1/12 of your income each month into a quote escrow account that you manage just doesn't seem to happen. So the tax bill comes up and everybody knows our property taxes are going up and it's now several $1,000s. And oh my goodness, where does that come from? So I do caution them, you can go do all these things, but please remember that you are going to pay those taxes and insurance each year.
We don't want that soft argument with anybody else because they're not
Absolutely.
getting paid the taxes and yeah, you're still an individual getting money from a bank and there are rules you have to follow. But no, this has been a great conversation. I'm hoping that people learn, there is advertisement out there. We see a certain individual now that's aged himself that's out there talking a lot about reverse mortgages. And again, kind of what we were talking about when we first started, it is a great product you can get pretty quickly, especially if you haven't planned. But I emphasize to people, please plan. I don't know how many times a day I say that, having been there with four parents over 14 years and not planned, it is a lot easier. You're going to make that plan to go to Maui or someplace else and have it down to the beaches and the car you're going to rent and the restaurant you're going to go to. Why not do a similar plan as we get older and age?
You could put a reverse mortgage on your home and never use it until you need it. And just use it as a peace of mind. There's nothing wrong with that. You're only going to pay the interest on your loan of you've either paid it off or the small amount of closing costs. I Can't tell you again how many people will do that and just let that line of credit grow. And, we didn't discuss that, but you don't have to use the reverse mortgage when you put it on. You can put it on. You do have some closing costs. And if the house is free and clear, then you've just bought yourself a huge amount of peace of mind.
And as we age, and as we've talked about, most of us, unless you did exceptionally well through your earning years, most of us are living on some sort of a fixed income. And just having that umbrella or that safety net below you, whatever you want to say, it's probably pretty comforting. I'm glad you brought that up, and people will understand, especially if they're feeling a little bit nervous as they get older and wondering if I need this or if I need that and how I'm going to pay for it. Final thoughts on that.
I think at some point in everybody's life of retirement, it will be looked at. It's timing, what's going on in your own personal situations. But I think they should look at it. Again, I'm very pro reverse mortgage. I won't deny that. I've seen how much it's helped people when they've done it. The breath of air that they can take and say, "I've got it covered. I can leave a legacy to my children by paying for a college education for a grandchild. I can have a family vacation that we can cover and everyone can enjoy each other," to actually making the house so that I can live in it and age out. You bet.
Sure. Wow. Great advice. If people want to get in contact with you, do you want to give out a phone number, an email, a website? What would you like to give out?
Well, it's pretty easy. It's my website is Laura Phillips. Now, Phillips has two L's in it, Phillips. You can also reach me by going to Laura at lauraphillips.com.
Fantastic. Now this has been great. A lot of great information. As I say with every episode, folks, please share this with all around you. Again, a reminder, October 14th, 1 o'clock Eastern on Zoom. That Zoom link is on our website, aplan2age.org. And remember that two is the number two, aplan2age.org. Come there, listen to over 10 different ways to pay for care. Some of those ways, I'm sure some of you have never heard about. Some of those I found at 3 o'clock in the morning on the web when I still should be sleeping, but I'm not. So thank you, Laura. I very much appreciate our conversation today.
Thank you so much. I do too. And yes, I highly recommend everybody go and learn what they can from the conference that he is putting on. You bet.
Thank you. And as I say, folks, until we talk again, have yourself a great day.